Hi everyone, thanks a lot for joining us for this big talk powered by The Big Whale, which is a media that aims to bridge the gap between the crypto space and the traditional world, ultimately building trust in this still trusted world. And today I'm very pleased to host Sankha Banerjee. I hope that it's a good pronunciation about your name, Shankar. I'm very pleased to host you because you are Chief Protocol Economist at Babylon, a restaking protocol of Bitcoin. So lots of people know EigenLayer, so it's on Ethereum. It's focused on ETH, but you choose to focus yourself on Bitcoin. So that's very ambitious to my point of view. So we can discuss all of this during this podcast. So my first question, it's very simple, Shankar. What's the best way to explain Babylon behind the to be a restaking protocol? Maybe it's a
Yeah,
good start to start.
yeah. Thank you for having me. Really excited to be here. So I've actually watched some of your previous podcasts. So it's a really good podcast where you get a lot of interesting insights into new protocols.
Thank
So
you.
I'm happy to talk about Babylon during this podcast. So so at Babylon, we are bringing the staking complex to Bitcoin. So what we mean by staking complex is we are meaning the word staking as well as restaking to Bitcoin. Now, as we know, like Bitcoin is a proof of work chain, so there is no staking primitive for Bitcoin. Staking is a primitive in POS systems. So the idea came around where we
So
felt.
sorry, Shankar, the POS is proof of stake. So just for the
Yeah,
for the
POS
people that
is
don't know.
proof
Yeah,
of stake
just
chains. So the major objective of Babylon is for Bitcoin holders to take on the slashing risk of proof of stake systems, and as a result, earn the staking yield for Bitcoin holders. So we think that this is a 0 to 1 kind of innovation for Bitcoin holders, because Bitcoin holders before Babylon, they could not get this yield in a trustless manner. So when we are letting this yield come to Bitcoin holders, we are not using any custody or any bridge solution. The holder locks the Bitcoin on the Bitcoin chain and is able to enjoy this staking yield.
okay, nice. But okay, before it was possible to have some Bitcoin, you have to go through Wrapped BTC to get some yield. So that's your word. It's not always trustless. So we can see. By the way, yeah, we can see a little case about Wrapped BTC. What is going on right now? So what's your view on this? Because you just talk about the trust, in this. So what's your view about this case? Because to remind the audience, BitGo decide to change, the condition of a wrap BTC, and that's caused a really huge. Maybe it's kind of an hurricane in the crypto space because, yeah, I'm very interesting to have your view on this.
Yeah, so I was actually, so I want to, maybe it would be better for you to just give the audience exactly what BitGo did, and then I can comment on it.
Okay. So just BitGo decide to transfer, the responsibility of the wrap BTC to another actor. So that change the term and the condition of the wrap BTC. So it's like to put the trust away, and we don't know what exactly, because wrap BTC is one of the only door to have a Bitcoin, on other blockchains. So for example, on Ethereum, on maybe on Solana. I'm not sure about this. And so you talk just about trust, and I'm very interesting because Babylon proposed to have another way of trust, and was very interesting to have your point of view and describe how Babylon is working, because it's kind of, as you describe, very different between the proof of work and the proof of stake.
Got it. Yeah. So, yeah, I did follow that, and definitely one of the interesting data for Wrap Bitcoin is that I think there's like $9 billion worth Wrap Bitcoin, and of that 9 billion, like only 20% of the Wrap Bitcoin is actually in use, and the rest of the Bitcoin is actually just Bitcoin, which is locked and converted into the wrapped Bitcoin format, but it's idle. So so the point is, like, it's not being used anywhere. So we felt that, I don't know what the reason for the low usage is, but the remaining 20%, which is being used, and that is making an yield of 0.1% on lending platforms, right? So the whole exercise of you're moving Bitcoin to a custody, and then that Bitcoin just either staying in the custody or it's being used in a lending protocol with 0.1 interest,
Hmm.
0.1% interest. That made us feel that the Bitcoin holders, the yield expectation of Bitcoin holders is a lot lower than pretty much every other ecosystem. So it kind of emboldened our case that if we are able to lock Bitcoin on the Bitcoin chain in a trustless manner and make this Bitcoin available for staking and other optionalities on the POS system, the Bitcoin holders might really like this infrastructure, because you're not trusting anybody, you're locking it in a self-custodial manner. So I think the trust assumption, which is sitting in the wrapped assets, specifically here with the wrapped Bitcoin, and that's actually a massive it's a good thing for us, because we are actually telling the Bitcoin holders now that you don't need to go this route. You can actually keep the Bitcoin in your control and still avail the yield. Before Babylon, you could not get into Ethereum and
Correct.
avail
Hmm.
any lending yield. But now with Babylon, we're first trying to make the staking yield available for Bitcoin holders. And the most important metric, or the most important, I would say, innovation here is we are making staking on chain for Bitcoin holders,
So
right?
yeah,
The major issue for Bitcoin assets which went through Wrap Bitcoin or something is they didn't fundamentally have an on-chain representative of their wrapping or something. So whereas with Babylon, once you lock your Bitcoin on the Bitcoin chain, you're keeping an on-chain timestamp of every activity which is happening, right? And that is a very strong, um, it's a very strong advantage for users, because as we know that everything in crypto is moving on chain, right? So we want to make sure that our innovation is completely time tracked on chain.
So okay, so Shankar, I'm very curious. Okay, I have some Bitcoin. Okay, I want to enjoy the yield, and to secure other protocol or other chain or other projects, crypto project through Babylon. So how it's technically working? I'm coming with my Bitcoin, and
Yeah.
what's happening?
Yeah, so the user journey is like this. So we have, so if you go to our staking dashboard, we have quite a few wallets, pretty much the industry standard wallets. And so if you have your Bitcoin, you will see the Bitcoin sitting on one of these wallets. And then what you're doing is you're basically locking your Bitcoin in a Bitcoin script, which is having three parameters. So the first parameter is your key, which you need to do to sign and lock the script. The second parameter is the duration of the locking, which is the time duration. And the third parameter is some kind of privileges you're giving a committee member, a group, you're giving a committee, so that if this Bitcoin is locked in a proof of stake protocol and it's enjoying staking yield, if the validator to which you delegate double signs, then a part of this Bitcoin can be moved from your control to another address to emulate slashing. So these are the three parameters. And fundamentally, slashing is a very low risk activity, because it's on-chain trackable. Whenever there's a Bitcoin validator who comes in, we call this Bitcoin validator finality provider in our jargon. So whenever your finality provider double signs, which means he's signing two blocks at the same height,
Hmm.
that's when the private key can get unlocked through a mechanism which we call it as one-time extract signature. And in that way, we are able to, once the private key is locked, anyone who has access to this private key can actually go in and remove a part of that Bitcoin.
Okay,
Now,
interesting. So,
what
so
we
just
yeah.
just Shankar, to be clear, at the beginning. So when I put my Bitcoin on the on Babylon protocol, I'm like creating a wallet, or I'm able to link my wallet, like I don't know, MetaMask, Phantom, Rabi, uh, or also a Bitcoin wallet, of
Mhm,
course. So not all of them, but uh, I'm creating a Babylon wallet. So
mhm.
and I receive a private key, an address. So it's working like this. Yeah.
Yeah, so basically, when you create your wallet, you have a public key and a private key. You need your private key to sign the transaction. The public key is
Yes.
identifier of your on-chain transaction. So what you're doing is you basically the wallets we have are the standard Bitcoin-based wallet. So let's say there's an wallet called OKX wallet, which
Okay.
basically
Yes.
shows your native assets like Bitcoin, as well as it can show you the POS assets. So that's why we use that one. But there are other assets, there are other wallets like that. So you basically log in, you see your Bitcoin sitting there. What we generally tell you is that we tell you that in order to avail the Bitcoin staking, if you
Hmm.
have a certain amount of Bitcoin wealth, please create a new address, right? So don't take your whole wealth and just start staking from the
Yes.
same address. So separate the amount which you want to stake in a new address, and then keep the original Bitcoin wealth in your old address. So what you now want to use is you want to stake the Bitcoin from your new address, right? So this is some part of your Bitcoin wealth to test it out. And when you are bringing this new address based Bitcoin, you're locking it on the Bitcoin chain and then you're signing it with the private key. And then you're waiting for the Bitcoin mempool and the Bitcoin miners to confirm this
Mm.
transaction. Once the transaction is confirmed, what that means is that your Bitcoin is locked on the Bitcoin chain. And now there's a relayer mechanism which takes this confirmation on the Bitcoin blockchain and conveys it to the validators of the POS chain, that there is new dollar voting power available, which you can actually pick up to create consensus on the POS system, because of which you get paid.
Okay, interesting. And so I'm receiving like a synthetic asset. So I'm put my Bitcoin on the protocol, and there is a synthetic asset, and this synthetic asset is gonna secure another blockchain or go through another project. That's right.
Yes, so we are using something which is called the dual quorum model. So the dual
All right.
quorum model is a two-tier consensus model. So in this model, the first time, specifically in the Cosmos blockchains, the native token creates consensus, and then on top of that, this Bitcoin delegation confirms the consensus. So it's a two-tier model, and because the Bitcoin delegation is creating consensus, they get rewarded. A part of the consensus rewards comes to them, and this is protocol specific. So every protocol decides how much money or rewards they want to give to the Bitcoin validators.
And can I have the choice, to um, for example, I have my Bitcoin and I want to choose like an EVS. It's correct to call in the
Yeah,
same
yeah,
way,
yeah.
a project, or there is a big pool, and I don't really have the control where my assets are going to secure another project, or I have the choice,
Yeah, so the
or can
way,
I have the choice
yeah,
also?
you will have the choice. So the user journey is you have connected yourself to a Bitcoin wallet, which provides this service from Babylon. So once you log into your wallet, you will first see the choice of the chains for which you want to delegate your Bitcoin for staking, right? So once you see these chains, let's say you have chosen Babylon chain and you have chosen Cosmos Hub.
Hmm.
Once you choose these two chains, then the validators show up, that which validator would you like your Bitcoin to be delegated, right? So in that way, yes, we are just a platform. The user is empowered to choose the chain and the validators.
Okay. And what's the business model for you? How you are getting money? Yeah,
Yeah, so
are you taking a cut, or?
yeah, yeah. So we are like a a two-sided marketplace. So we have the supply coming from the Bitcoin holders, and the Bitcoin holders are making money by delegating this Bitcoin to get consensus rewards. So we plan to take a cut of these rewards.
Okay, and what this amount of this cut? What's the level?
Right now, we have not decided that because
Okay, that's
uh,
why I'm asking the
yeah,
question.
yeah. Ideally, the way we want to kind of think about this is we want to first get the locking capital, which means the Bitcoin supply, and that's where we are heading towards the mainnet over the next week. And after that, we want to activate the AVSs or the chains, and then after that, we want to activate slashing and the rewards. So it's a three-phase process.
Okay, so by the way, can we have an overview of the roadmap? You know, in
Yeah,
terms
yeah.
of calendar, because you
Yeah,
just
yeah.
talked about it. It's
So,
very interesting.
I would say like don't hold me to the exact date, but I would
Of
say
course,
that
but
we are. So, yeah.
just an
So
overview, of course.
overall, so by the end of this month, we want to enter into the phase one of our mainnet. The phase one of our mainnet is basically locking Bitcoin holders can come and lock their Bitcoin to show interest in earning the staking yield. So that's going to go for probably a week, 2 week to a month. And after that, we're going to have a few more phases of locking capital, like that. We want to see like how much Bitcoin capital is locked. That actually shows some form of interest in terms of like Bitcoin holders wanting to have staking interest. The second part would be onboarding of the chains. Now, in the first part, when you're locking the capital, we are giving you the option to choose the validator. Okay, so this is just an option. So in the second part, when we are activating the chain, because you have already chosen the validators comes into activating the chain. And then the third part would be to activate slashing. And
Yes.
as activation of slashing happens, that's when you get paid in rewards. So it's a three-phase process. It's a bit similar to the EigenLayer roadmap, where they have actually locked the capital, then they have activated the AVS, and then they have activated the slashing and the rewards.
Interesting. And um, you know, when when did you get this idea to use another asset to secure the chain and also to start with Bitcoin? Because for me, it's that the same purpose you have as EigenLayer, you know, but you start with Bitcoin on Cosmos. So why did you choose that?
Yeah, so there's a little bit of a history. So Babylon is founded by Professor David Say and his postdoc Fisher Yu. So they are consensus researchers at Stanford University. And David was very instrumental in working with the Ethereum Research Foundation to help them with the migration from proof of work to proof of stake. So as we
Okay.
know that the Ethereum paper, it had a very strong primitive called timestamping. And basically, the timestamping design was there to prevent a very well known attack vector in proof of stake systems. It's called the long range attack vector. Fundamentally, what that means is that the validators bond their economic capital to create consensus security, and they get rewarded for that. However, if at some point a validator unbonds his capital, he can actually go back in the history, and then he can try to create a fork, and he can create a new chain parallel to the
Mm,
original chain. And now, even though he has unbonded his capital, he's pretending in front of new delegators that this chain, the one which validator has forked, is the original chain, right? So in that way, he can actually steal capital, or he can confuse the delegators to
yes.
allocate. So if you timestamp the history of your state transition or the evolution of your chain, anytime there is a fork, the community can actually look at this timestamp history and understand that which chain is the correct chain and which chain is the fork chain, right? So the timestamping element was kind of a design on the Ethereum side, but that's when Luna happened, and a lot of the validators in Cosmos, they have this default unbonding period of 21 days. So
Mm.
within 21 days, and why this period is 21 is because the Cosmos blockchains are trying to figure out that whenever somebody unbonds, are they unbonding to create a long range attack, right? So that they think that 21 days is a good time period to come to a consensus that you have not unbonded to create any bad activity. Because this 21-day period exists, this is a capital inefficiency period because you're neither making returns, you're just unbonded and waiting to get back your capital. So when Luna happened, a lot of the validators who were doing good work, they unbonded, but they never got the money back because the
Yes.
market went to zero within a few days rather than 21 days. So David thought that bringing this timestamping primitive to Cosmos chains would be a very good capital efficiency model for different Cosmos chains and help them reduce their unbonding period to 1 day. And we actually got a governance proposal passed on Osmosis on to appreciate this the reduction of the unbonding time. So while we were working on this timestamping design, that's when we started going very deep into understanding the Bitcoin holders' interest, and we found that the timestamping really helps the Bitcoin miner because it improves some gas fees on the Bitcoin chain. But Bitcoin as a blockchain has two agents: the Bitcoin holders and the Bitcoin miners. The Bitcoin holders are just holding the asset, thinking that the asset is going to go to moon or it's a very good
Yes.
asset.
The store
Uh,
of value.
yeah,
Yes.
store of value. So we felt that okay, the bigger way to activate this group of people would be that if we can let them lock their asset. So if they lock their asset, now we have to give them a return because they're taking on duration
Yes.
risk,
They are
and that's
putting
where,
capital on. So
yes. So that's where we saw that the proof of stake market is growing at the rate of 10.5% annualized. And there is a natural design constraint in proof of stake, which is that the security budget of a proof of stake blockchain is constrained by the market cap of its token. So if the token does very well, your security budget is very high. If the token does not do very well, your security budget is very low.
logic.
So as a result, depending on what the market perceives as the value of your token, the security is dictated by the market. And this we felt was a massive opportunity for us to disrupt literally the whole proof of stake system, where we think that onboarding Bitcoin capital to make sure that your security is stable so that you can focus on the economy is a very good design. And that's how the Bitcoin staking model came, that we are able to lock Bitcoin and let this Bitcoin dollar voting power get onboarded on any of the chains, which is the ones to have a stable security budget.
Okay, interesting. So, for you currently, there is only two kind of assets we can secure or we can do restaking. That's ETH and BTC. That's correct to say that right now because they are the biggest asset, in the crypto space. So for me currently, we are just able to trust the security of Ethereum and the security of Bitcoin. That's correct to say that, or you are looking to another to integrate another asset, or in the future maybe to integrate maybe I don't know some Cosmos asset, for example, to make some restaking on it.
So right now, the Bitcoin market cap is 55% of the total market cap, and I think if it gets it like in the bear markets, it generally is 60%. So I feel like the amount of scale which is there in the Bitcoin market for Babylon is so big that we don't expect to have another asset as a
Okay.
supply. And one of our core ethos is we are building this primitive to really bring the action back to Bitcoin. So we fundamentally think that majority of crypto protocols or crypto founders, crypto enthusiasts, they're Bitcoin maxis because the whole dream and the career started with Bitcoin. So we don't really have any plans of integrating any other asset. What we do think is that there will be a lot of innovations because of the amount of staking capital which is going to get deposited, and the very little interest which it would like to have, and that would create tremendous impetus for developers to build on this locked capital.
Mm. Okay. And what do you mean by build on this log capital? What kind of building you are thinking of?
So we already have a lot of ecosystem projects, namely liquid staking derivatives. So there are a lot
Ah,
of
okay, okay, okay.
staking
It was
derivatives.
that's kind. Okay, okay, okay. So like for like some kind of AVS or some
Yeah.
player like that. Okay, okay,
So on both on the supply and the demand side, so there are ways you can come in and lock your Bitcoin on the Bitcoin chain. Then there are other ways you can lock your Bitcoin on other protocols, and they become the stakers. So there are a lot of ecosystem projects which are building on us. The LSTs, there are integrated hybrid LSTs. So there's a lot of products which are trying to utilize different aspects of user preferences.
okay, okay, okay. Um, Interesting. Um, what will be the period of unstacking? You know, did you fix this right now? It's still on the table, or it's can we know more about that?
So I want to just make sure that I understand the question. You said unstaking. So
Yes. So
meaning,
so
okay.
yeah, my question was, I want to unstack my Bitcoin. What will be the period to do that?
Yeah, so you can unstake your Bitcoin anytime. So you can lock it, and then an hour later, you think that maybe you don't want to do it, you can unstake. But once you unstake, there is a period of 7 days where
Okay.
after which you get back your Bitcoin.
Okay, okay, 7 days. Okay, and you know, for me, Shankar, the most critical point of you concern the self custody. So you describe it just in the beginning of this interview, and as you have pointed out, Bitcoin is the asset with the most credibility in the ecosystem in general. So there is Bitcoin, there is Ethereum, of course, but Bitcoin holders are often the most reluctant, I would say, to delegate their Bitcoin. So how do you technically guarantee that they maintain the control of their assets at all time? Because you know, on your benchmark, you know, the currently period of unstacking is 7 days. That could be a lot for many Bitcoiner, you know, especially for the maxi Bitcoiner. So, um, you know, how was your benchmark, you know, going with all of these parameters, these very strict parameters that represent the perfect the Bitcoin maxi community? You know, for example,
Yeah,
you
yeah,
know, I want to bring my Bitcoin. There is a risk I'm going to losing them. So
yeah.
how was all of this, you know, in your mind when you're thinking about the building of Babylon?
So I think you're asking a very important question in the context of security, which is that when you are staking your Bitcoin, at no time your private key is with anybody other than you. What you
Mm,
do is when you are staking your Bitcoin, you're basically like specifically if you're not solo staking but you're doing delegated staking, then you're basically directing the voting power to this validator, but the Bitcoin which stays on the Bitcoin blockchain is completely under your control. So at
okay.
no point can the delegation has nothing to do with the private key aspect of the Bitcoin. So it's a complete self-custodial solution where the Bitcoin, which is locked on the Bitcoin blockchain, so it's an on-chain representative, it's verifiable. So you're never giving away the private key so that your asset is under other people's control.
Okay, but if I'm slashing of my Bitcoin, what will happen? I'm gonna lose my Bitcoin. So
Yeah,
uh,
so this is where let's go a little deeper. So basically,
yes.
what happens is that when you are delegating the Bitcoin to this validator, and imagine the validator double signs then
Yes.
there is a parameter you specify about how much of your Bitcoin is you are willing to get slashed. So
Okay.
that parameter could be 5%, that parameter could be 10%.
Mm,
So when the private
okay.
key gets uncovered because of double sign, it can only take that 5% which you have pre-signed. So no way that there is no possibility that your slashing amount would be greater than the amount you have pre-signed. So
Interesting. Okay.
you are deciding in order to lock
The
your.
risk you want to take. Yes.
Yes, exactly.
Ah, interesting. And maybe that's a perfect transition for my next question. How will be this yield will be determined, of the POS on Bitcoin? Maybe it depends of the risk I want to take, as just to describe previously.
Yeah. So there are two parts to it. So the what I said in the previous question is once you are signing into how much of the Bitcoin you're comfortable getting slashed. So let's say generally in proof of stake, the probability of the slashing is around 5%. So whatever Bitcoin you stake, you say I'm okay with 5% of this Bitcoin getting slashed. So if that's
Okay.
the case, then the yield which is coming is completely different. The yield is dependent on every POS system has their own native yield. Generally, we have seen that the median native yield moves between 6 to 10%. Okay, in the native
All
token.
right.
So
6 or 10. Oh, it's a lot.
10%. Yeah, so 6 to 10%. So from what the Bitcoin holders are making right now from Wrapped Bitcoin in lending market, that's around 0.1%. So this is almost like yeah, this is almost like close to like 50%, 50 times more than the yield possibilities. So, and this initial yield between 6 to 10, this is from one chain. So if your Bitcoin is restaked on two or three chains, then even if each chain is giving the Bitcoin holder 25% of their yield, the native
Mhm.
yield, you're looking to make a healthy yield in terms of the POS tokens you're getting, right?
Okay. And what kind of asset I'm gonna receive in yield? That's gonna be Bitcoin? Maybe not.
So
It's
no, so there are two ways. So the first is the Bitcoin holder has the option to get the yield in either the proof of stake tokens, or they can choose that they want it to be swapped into Bitcoin, and then there is a backend DEX which can actually swap these rewards. So we
okay.
keep the option open depending on if the Bitcoin holder wants the yield to be in Bitcoin, or if he wants to carry the proof of stake tokens.
And what will be this DEX? What kind of
So
there's gonna be a bunch of decks, or there gonna
yeah,
be
so
one DEX?
no, there is going to be a few. So there are dexes in Cosmos. Then my own previous background was with Thorchain, so there's also like some works with Thorchain. So there are a few dexes which are in the plan of integration at this point to kind of look into the swapping of the yields.
So, for example, Osmosis, for example, we can imagine. All right.
Yeah.
Okay. 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 Interesting. Very interesting. Um, Yeah, there is most of the time Shriram Khan, who is the CEO of EigenLayer, described that he want to build, you know, uh, he believe in this vision that Ethereum or the entire crypto space is going to be another layer on top of the internet. So you will be able to connect. Maybe in account abstraction or with restaking, you can use a bunch of services all around the blockchain. So I'm very curious with many questions about this. Is there a competition with EigenLayer, and can Babylon succeed in offering the same services as EigenLayer in the long term, despite Bitcoin's lack of programmability? You know, that's a huge question because, as you described, it's very difficult to integrate a system with a POS with a blockchain is working on proof of work. So yeah, in the long term, how are we gonna see? How are you seeing this?
Yeah, so this is a very interesting question, and we get asked about this question predominantly when we go to raise money. There was the big difference between EigenLayer and Babylon. So there is quite a lot of differences, and I think like Sriram came out of the lab of Professor Say, so we have very
Yes,
good relationship
that.
with the thought leadership of EigenLayer and Babylon. But going back to the differences, so EigenLayer is a restaking, meaning the Ethereum is already staked, and they are telling the stakers of Ethereum that if you want to take on added risk, then you can get paid. And fundamentally, because Ethereum has a state, so the programmability aspect of Ethereum helps them kind of create a lot more application-based slashing, very interesting use cases of slashing. So in case of Babylon, the most important aspect we are looking at is there is no staking industry in Bitcoin, right? So our initial goal is just to get the Bitcoin staked, and that
Mm,
itself is a $1 billion industry. And we expect from the demand we are seeing that a significant amount of Bitcoin might get locked in order to avail the staking yield. Now, on top of that, we will enable restaking so that the Bitcoin holder is getting a much better yield in terms of not just allocating the capital to one chain
yes.
but multiple chains, right? So that there's a fundamental difference that we are, in some sense, Babylon is Ethereum plus EigenLayer rather than just EigenLayer, because we are bringing the staking primitive to Bitcoin. But now the second part of the question is, okay, how do we see the value proposition? And we think that Bitcoin holders are happy with any non-zero yield. And we are talking to institutions, and for institutions who are sitting on billions of dollars in terms of Bitcoin wealth, they are happy in a non-custodial trustless yield, which could be a few basis points.
Mm,
So fundamentally, the yield which the Bitcoin holders are asking is so much lower than what Ethereum's base staking yield is, which is 3.5% or something. So we think we have this massive arbitrage where Bitcoin holders require much little interest compared to even the base Ethereum staking rate. But then comes the next point, which is what are the type of applications you can build, because Bitcoin in some sense does not have smart contract. It's a stateless blockchain, so it does not have any memory aspect to its blockchain. So that's where we think the Babylon chain, which is a proof of stake chain, can actually come in very handy and excite a lot of the developers if we can get this staked capital, that the Babylon chain acts as a control plane for these developers to build lending protocols, DeFi, DEXs, and we are actively working on making the Babylon chain a very programmable, friendly developer platform where anybody can come in and they can deploy assets.
but are you, or are you choosing, or if you even choosing the AVS or the people gonna build on the Babylon?
Yeah, so we have a lot of builders on either side. So we have people who are building on the Bitcoin chain based on the staked capital, but we also have like AVSs being built on the Babylon chain, where they think that the Babylon token is going to be very heavily secured by Bitcoin. And so the security budget being stable and the programmability of the Babylon chain would help them build AVSs, different perps, dexes, DeFi, and everything.
And to talk about your token, you know how it's gonna work. That's gonna be a governance token. That's gonna be, because you know I'm very interesting because I talked with Jesse Pollack, who launched the Base layer 2 of Coinbase, and it was very interesting because Base didn't launch a governance token yet. So that's very interesting in terms of strategy. So and Jesse Pollack just said to me there is not just one way to have a governance and to have a token. So we can. choose, another way to have a governance, a democratic governance, or to put, a governance on a protocol. So what's your view on this? And my underlying question is, what will be the use of your token on Babylon, and in the long term, what's your plan about this?
Yes, so we have been working on a few designs. So definitely we want the Babylon token to have a few attributes. So we want the token to be paid for the gas on the Babylon chain. We're also looking at the governance aspect of the Babylon token because it's like a control plane layer between the Bitcoin capital and the POS demand. So we want to kind of understand that how do we motivate this token to be more powering the users on either side, because it's basically a two-sided marketplace, and how do you use the token to
Mm,
take the two-sided marketplace from an initial bootstrapping era to a steady state era. So
yes.
yeah, so we are kind of discussing a few areas where I think it's going to be a mix of a governance and a gas token, and how the value accrual goes back to the users. We're still collecting data. We'll also see part of our mainnet will give us a lot of activity, and we're going to see that, okay, what are the activities we want to empower, what are the activities we want to damp out. And so the token is going to work in getting us from the initial state to the final state.
Okay, okay, okay. So it's not fixed right now.
No,
Many
no,
doors are
we
still
definitely
open.
we have some economic ideas and
Okay.
intuition-driven ideas on some basic template, but we want to wait a little bit to see the activity and kind of get to the final design.
And when the final design will be released, if we can have a calendar about this, a date maybe.
Oh, you mean like what date would be the final like tokenomics be released?
Yes.
Yeah, so we are thinking it's over the next 2 months after the first phase of mainnet,
Okay.
because we definitely want to think that the actors who are going to be part of this ecosystem, they're kind of completely not known because it's a completely new primitive. So
Yes.
we don't want to kind of presuppose and have a design which we can't change later. So this will be like I would say a little bit on the go, understanding the market, understanding the microstructure, and bringing it back to the design.
Okay, okay, okay. Let's go back to EigenLayer for this, because Shriram said all the time, or often right now, say that Ethereum is a very favorable internet, Rollup is a very favorable web server, AVS is very favorable SaaS, and EigenLayer is a very favorable cloud. So, by this, um, what is described is the formation of a whole new layer, as I said, on the top of the traditional internet based on the public blockchain, so like Ethereum or maybe Bitcoin, maybe with DeFi on Bitcoin later, we will see if it's going to work. So this means, for my perspective, my understanding, that tomorrow the whole of the vast majority of the internet will be on blockchain, on public blockchain. We hope so, maybe both, with the possibility of launching numerous services thanks to restaking. So, first of all, do you agree with this vision? And do you have the same ambition as EigenLayer for Bitcoin, and to be the part of this big layer, of internet?
Um, I think on a high level, yes, but I think our roadmap is very different than
Okay.
EigenLayer, because I think at the end of the day, EigenLayer, all right, this is my understanding, is
Yes.
EigenLayer was brought in and they did an amazing job in maximizing Ethereum's value accrual. Whereas in case of Babylon, our objective is to create a framework for maximal value accrual for Bitcoin, right?
Okay.
So I would not go and say all these fancy words of like whole new economy or something, but I think what I feel pretty bullish is that Bitcoin holders have very low yield expectations,
Mm.
and they are probably the highest security blockchain. So anyone who can actually exploit this efficiency, that you have very high security for very low cost, and you can export this security to proof of stake systems which are struggling to build their economy because their security is handcuffed, right? So if you're a cloud marketplace and your security is $50 million, you can't really beat an AWS or a Google Cloud, which
No,
is
right
doing
now, no.
dollars. So our thesis here is that we want to bring this scalable security from Bitcoin to these app chains which are struggling to get a product market fit because they are constrained by the market cap of their token to the constraint of the security. So if we can uncouple that and let them be very secure, then these ideas are very powerful and they probably are going to develop over the next few years. So in a high level, we feel very confident that Bitcoin holders are looking for any non-zero trustless yield, and we are letting these Bitcoin holders get that. And that should create this Cambrian evolution of dApps, apps, a lot of existing chains which are constrained by high inflation. They would move to get Bitcoin staking, and and,
Hmm.
and as a result, I think on a high level, our goal is to create a better economic balance for proof of stake systems. Accepting Ethereum, every proof of stake system, the economic balance, the way I define it, is the money which you make from the economic activity minus the money which you pay for security. So
Yes.
every proof of stake system, excepting Ethereum, this economic balance is negative, meaning they pay a lot more for security and their economy is barely developed. So with Bitcoin staking, you can actually reduce this negative economic balance and make it at parity, and that creates a much more scalable economy. So um, in that aspect, we are trying to empower every chain to achieve a positive economic balance so that the economy drives the game rather than the security aspect.
Yeah, yeah, yeah. No, no, no. I know, but my question is for with restaking, we are able to let flourish the innovation. So that's a huge change, as Chris Dixon, for example, just described in this book, a new era for internet. So, do you believe that it's reasonable to believe that in the future, for example, we can imagine X, so Twitter X, will be secure by Bitcoin, the protocol of X, because X gonna move on the public blockchain? Because you know. That's we can believe that it's a marketing, but it's a goal too, to move all of the current internet on chain, because there is this trend I see right now currently, and often of the time it's like the new to be on chain is to be the new online. Do you believe in that?
Yeah, so I think the verifiability component is very strong, right? So if you can verify, then you have more trust. If you can verify, then you have probably more confidence. So I would say, like, when we do like bank transactions on Venmo or PayPal,
Mm,
a lot of times we don't really know what's going on, right? So if what if the money doesn't come? And I think Venmo and PayPal, I've not seen this, but I've made some transactions on Zelle where the transaction got
yes.
like, didn't go through, and now I'm like, or did I lose the money, or do I have to call the bank? So I think already we are seeing in terms of like on-chain transactions that even if it fails, we can go to the Etherscan and we can see what's going on. Okay, we didn't pay enough gas, or there's a gas
Yes.
congestion. So I think this verifiability aspect is becoming a part of the human life, and I think this is just going to move people more towards on-chain. Where I think Bitcoin staking can actually play a big role is fundamentally crypto over the last few cycles have been overpaying for security, and this is basically contrarian to the web 2, where if you build a company, you don't 50% of your expenses are not through cloud expenses
Mm,
or data center expenses, but if you build on-chain platforms, a lot of your expenses are actually paying your validators who may not be even participating in your economy. So we are trying to kind of change this model where we are telling protocols that you should pay the least for your security and get the same amount of security, and then focus all your incentives and your issuance to bootstrap the economy.
Interesting. So Shankar, thank you. I don't have any more questions. If you want to add something before the end, but the time is running out right now. So thank you for your time. Almost 1 hour together. Lots of insight. I didn't know. I read a lot, of course, about Babylon, but it's more clear right now. So thank you.
Thank
Thanks
you.
a lot for this. Good luck, by the
Thank
way,
you.
because you have a huge roadmap in front of you. And yes, see you maybe later around the world. We will be in Asia in September. So for token 2049, so maybe we can see
Sure.
each other
Sure.
in this event. And if not, good luck, and thanks a lot to have been with us to describe all of this exciting thing about Babylon. We wish you a good luck for your roadmap.
Cheers. Cheers. Thank you.
Thank you, Shaka. Thank you.